Hi everyone, it's Justin. A friend of mine came to me and said, Justin, I've only been self-employed for about a year. I've got some good books and I'd really like to get onto the property ladder and get a mortgage. So I said, I tell you what, I'll give you my top tips of what you can do, because it's quite a tough ask in order to get a mortgage when you've only been self-employed for a short amount of time. Most lenders do want to see about 2 years worth of kind of accounts or tax returns. So if we're going to go for it and we're going to try and do something, let's actually present the best possible case. So what was the first tip that I gave them? First thing was to credit check themselves. Use a service called Check My File. I think it's the best one personally. It checks lots of different sources. I think there's 3 in total, and it gives you a full credit report. It's not giving you a credit score. Well, it does give you a credit score, but it gives you a full report. You can see the full detail of everything. So if there's something wrong, you can actually correct it, or hopefully correct it. You might find that someone's put a bad mark on your credit record and that's incorrect, and you can go off and sort it out ahead of time. Obviously, it's nothing worse than going for a mortgage and then the lender turns around and says, oh, there's a problem in your credit file, and it just scuppers everything. So go and check your own credit file. The second thing is use a broker. Not all brokers are equal as well. Try and find someone who's independent. They work with a network where they can access huge numbers of lenders as well. Brokers are so valuable in my opinion. They go off and do all that legwork. I struggle for time, so I find working with a broker is the best way to go. They've got loads of experience. They know what products. They know the difference between the products. And I know, talking to the broker that I use about our clients, I said to him one day, I was like, I've got a client. He's got a huge amount of unsecured debt, and he wants to kind of get rid of it into the mortgage. And he's with, he's been looking at this particular lender, and the broker turned around and said, well, they won't do it because of X, Y, and Z. This is the lender that really is the only option in the marketplace. I mean, what a time saver. But I think brokers, they've got relationships with business development managers at all of the different lenders, so they can ask questions before the application goes in. I think they're worth their money, to be honest. So use a broker. The next thing is get ready with your tax returns and your tax year overviews. The lenders will ask for your tax calculation, and they want to see proof that you've paid your tax. So it's really important that we pay our personal tax bills on time. The lender will ask to see the tax year overviews, and if they see a line which says interest, that's a bit of a problem as well. So make sure we've got all of that stuff ready. So unlike my friend, hopefully most people watching this video will have been self-employed for 2 years. When you're talking to your accountant, by the way, about your taxes as well, imagine you're a company director and you've got some flexibility on dividends. Make sure your tax calculation is either staying completely stable or going up slightly. And this might sound mad. I was talking to one of the mortgage brokers that we tend to use, and he said to me, even if it goes up by £1, it can make a big difference when it comes to actually getting a mortgage. So very interesting. You're going to need those tax calculations. Get our stuff in order. Pay on time. Good sort of kind of organisation needed there as well. The fourth thing that you're going to need is bank statements. So whenever you're going for a mortgage, they're going to ask for at least 3 months of bank statements. And of course, what we really want to see on those bank statements is what we call good account conduct. So if you know you're going for a mortgage, now is the time to ensure when we get to the end of the month, we have a surplus on the bank account. It's the time to go start shopping at Lidl and Aldi, cutting back, looking at all of those unused subscriptions. We want to present the best possible set of bank statements to the bank, because they do look at them and they're going to check those sorts of kind of key aspects as well. You've said you're going to live off this amount of money. What actually are the outgoings? They don't want to see wages coming in on the first of the month and they're all gone by the second of the month. That's a big warning sign for lenders, and they're not going to lend to you. So let's think about, get those bank statements ready, but also let's have them in the best possible shape as we can as well. The next tip I gave my friend was review your liabilities. Think ahead, thinking about credit cards, loans, all of that sort of stuff. We might have our eye on a new car. Getting a new car is probably not a good idea just before you get kind of a mortgage. If you've got unsecured debts, it can factor into affordability. So let's focus on getting those debts paid down as well. If you've got credit cards, get those paid off, because it will factor into affordability, how much you can potentially get on the mortgage. And I think some people with car deals as well, they go into like these PCP agreements. They've got relatively low monthly costs, but actually the amount of debt that you're kind of carrying and holding is actually quite significant, and it can be a bit of a disappointment when the lender turns around and says, oh, you've got this huge car loan and it's going to affect how much you can borrow on your mortgage. So just think carefully about your liabilities. And going back to my point earlier, let's get some budgeting done, cutting down on unused stuff, really reducing down our kind of monthly outgoings. But just remember, pay those credit cards off first. They're the things that will really kind of affect you in the long run. The next thing is you're going to need your pay slips, and it's really, really important that you've got your pay slips ready. The lender will ask for 3 months of pay slips before you kind of, to go in. Now, if you're company director, you will still have a pay slip. Make sure that you're on a payroll. It can we've had clients come to us, they've been kind of doing their own thing with their own accounts. They haven't been running a payroll. That's a bit of a dangerous thing in itself, not to be doing that. And of course, they've gone for a mortgage, and the lender has said, well, why aren't you on a payroll? So even as a company director, you should absolutely have your own pay slips, but you're going to need 3 months of pay slips. That's a kind of key thing. So make sure that you are kind of moving on to my next point, paying yourself on time. I shot myself in the foot with this one many, many years ago. Because you've got your own company, you just can take money whenever you want, really, can't you? And I was just taking a lump sum. I wasn't really paying the right amount on the payroll. I was just, doing that. And of course, when I came to apply for a mortgage, the lender turned around and said, but Justin, you haven't been paying yourself on time. There must be something wrong in your company. Of course, there was nothing wrong in my company. I'd just been taking money whenever I felt like it. So ever since that day, when I get my payslip, even though it's the small company director amount that I take out, I pay myself with the rest of the staff absolutely on time, and I've always tried to take a monthly dividend. The people are sometimes a little bit critical about monthly dividends. I don't personally have a problem with that, because when it comes to mortgages, lenders like to see regularity of money going into the bank account. So they're employees, mortgage underwriters, and they understand how they get a pay slip at the end of the month, and that money lands in their account. And if your money is kind of coming in 2 different amounts, salary and dividend, then actually they can get it, and they can wrap their head around it. And it's basically a tick box that we're going to do here as the mortgage underwriters working through your application. Like, are they getting paid on time? Yeah, absolutely. I can understand that. No questions needed, basically. So yes, pay yourself on time. And if you've got a sole trade business and you've got a separate business bank account, let's make sure we've got regular transfers of money coming across to your own personal account, making sure we've got a bit of a surplus there as well. So good account conduct. Number 8, make sure you pay your tax, show an upward trend, and take a regular dividend. That's the kind of really kind of key important as well. Number 9, I would probably say on my list of things that we've got to do is think about bank account etiquette. It's really, really important that you're not bouncing payments, you're not near your limits, you're not at the top of your overdraft, you're not doing all of these kind of crazy things that lenders don't like. I think also trying to cancel those unused subscriptions, shopping around for insurance premiums, all going to make sure that you're kind of presenting the best possible things as well. And the last point that I'm going to make as well is don't make any changes to your business structure in the run-up to changing from going for a mortgage. I've had clients come to me and say, oh, Justin, I'm going to move from a sole trader to a limited company, and there's great commercial reasons for doing that, and in terms of managing risk. And I'm just like, first question I usually ask is, when are you next due to get a mortgage renewal? So we sometimes expedite that process. Make sure we've got a mortgage offer on the table, just to make sure that we kind of understand what's going on. But I think also people are a bit apprehensive about changing business structure sometimes, because in the past lenders have said, well, you've got to have 2 years worth of self-employed books within that. So sole trade to limited company, it almost like starts that process off again. There are some lenders, and we have been getting clients over the line with mortgages with the help of a broker, when they have changed their business structure, and that's the case that my friend is in, is that she's gone into kind of a limited company structure, and she's done really well. There's no issues at all with kind of the situation. It's just about kind of ticking a box, which it can seem really, really, really frustrating when you're self-employed. And I think the final point I'm just going to leave you on today is that it has been a horrible experience for me over the last 20 years with mortgage lenders. I'm not going to lie to you. It's just been hideous, where they basically said no all of the time. Oh, you pass affordability, but we can't pass you on the kind of regulatory tick box exercise, or raising anti-money laundering inquiries just before I was about to complete on a property. They don't like us. Let's face the fact. More, lenders, self-employed people, they see us as high risk, unconventional people. Maybe the statistics support that. A lot of my clients, they've got really good, solid businesses. They've been doing it a long time. I've been in business for 20 years. I think one of the key things that I would just say, and I'm maybe going to make a separate video on this, is that I have paid down my mortgage, my home mortgage, really very, very quickly, and I've got, I'm not too far off paying it off. And the reason for that is because I don't want to be in a position where when I do really need some money, or something goes wrong in my business, that I've got this huge mortgage around my neck. So I've always taken an approach that actually, as self-employed people, we should try and probably borrow not too much, maybe take slight compromises on maybe where we live, rather than maximising absolutely to the top and then tend to overpay on your mortgage as well. So anyway, there's my kind of key thoughts, my top 10 tips if you're self-employed and need a mortgage. So thanks for tuning in, and don't forget to subscribe. Thanks. Bye.